I'm John Hanna for CDTV.net, and we have Greg Womack, President of Womack Investment Advisors at Edmond, Oklahoma. Hi, Greg.
Good morning, John.
Morning. Greg, what do you have for us this week?
Well, looking back over the last week, John, the Dow closed for the week a millimeter away from breaking even for 2009. But the S&P hit a new closing high for the year on Tuesday, and the NASDAQ continued to outpace the other indexes. So, by the week's end, though, optimism seemed to be tempered by concern about some of these economic green shoots might lead to higher inflation and, of course, the Fed action on interest rates. So in the short-term bonds, we saw Treasury yields back to the levels of last September. In the 10-year Treasury right now, the yield's about 3.86. So it was up substantially for the week because of fears or concerns of perhaps inflation or the future Fed rates. So that the market was kind of tempered by that. As far as economics, consumers had a little bit more income in April, but they seem to be saving it instead of spending it. So even though personal income rose, basically spending was pretty much flat. More of their disposable income for consumers went into savings. In fact, it rose to 5.7%, the highest in 14 years, and almost a full percentage point higher than March. So consumers are saving; they're not spending. And then on the employment side, May's unemployment hit 9.4%, which is the worst level since 1983. But the new job losses, John, in May continue to be less than expected. So I don't know if you want to call that a green shoot or not, but definitely some improvement there. And that was compared to April's estimates, or what they had done, for 504,000 new job losses. So if we continue to see this trend where the new job losses are becoming less, that's a good thing. And hopefully we start to see the economy picking up some. But real estate, National Association of Realtors Index of pending sales of previously owned homes rose in April for the third straight month, and it was even better than the 3.2% in April, so it rose by 6.7%. And so auto sales, are continuing to fall, have been going down. Construction spending rose a little bit, but was also better than expected. Another green shoot we might talk about, John, is the Institute for Supply Management's the report in May. It was the first month since November of 2007 in which new orders were up. So a little bit of a green shoot there. Now in the Dow, GM and Citigroup were exited, and enter Cisco and Travelers. As of June 8th, the Dow Jones Industrial Average boots a bankrupt company that had been part of the index since 1925. And so, European banks, as far as their worldwide interest rates, Central Bank and the Bank of England kept their interest rates unchanged at 1% and a 0.5% on the Bank of England. So, interesting week. Markets are still hanging in there. They're off a little bit today. And for this week, I think a lot of eyes are going to be on the U.S. Treasury's midweek auction of long-term bonds, which they're going to determine the ongoing demand for U.S. sovereign debt. Then on May retail sales will give another indication of consumer mindset. So we'll see what this week holds. Not a lot, earnings season is behind us for the majority of it, and so it's mainly how are we doing as far as the general economy. And we'll get a little bit of taste of that with some retail sales. And, of course, all eyes are on the bond markets now. Are we going to see higher inflation? The Fed's going to start raising rates. That's kind of what we're seeing. So we'll see what happens. But I see support, John, on the S&P 500, resistance. We've had a nice run-up. Resistance on the S&P about 1,000. The Dow Jones Industrial Average, the next resistance level I have is 9,090. And, of course, the NASDAQ around 1,900. The NASDAQ's been acting really, really strong, up 17% year to date.
Consumers tend to be saving more because everybody's scared of, the potential outcome that they might lose their jobs. plus we have the high unemployment, and then the changes in the Dow. So yeah, there's been a lot of things that happened last week. Now, at least this week, we're kind of on a quiet side, and you projected some resistance on the three indexes.
We'll see if that happens. So far, the Nasdaq has gone through, and the S&P have gone through some resistance levels I mentioned last week, and so the levels have been bumped up a little bit as far as they need to break through these levels. They'll probably come up and test those in the near future. But more than likely, we'll eventually see some kind of pullback, I would think, at least in the short term. I mean, we just can't see something go up 40-some% and expect us to keep on marching long term. It's healthy for the markets at some point for the indexes and stocks to take a little bit of a breather, a little bit of a pullback and consolidate some. That's what we'd like to see at this point.
That's Greg Womack with Womack Investment Advisors at Edmond, Oklahoma. And I'm John Hanna for CityTV.net.